Victor Yang, Senior Analyst at JLC Network Technology. Victor, there's so much to talk about from China. Great to have you on. Let's just start at the basics here. Of course, there's all of this stuff in the world that's impacting everybody and including China. But let's just look at the Chinese oil demand, oil imports over the last few months. I mean, if you just arrived from Pluto or Mars, you might say, oh my God, China is very healthy and loves oil.
And when we look at oil demand, there's no significant direct impact yet, or say in the short term. But over the long term, the impact will be more significant because of the, impact on export. When export shrink, demand for energy can be affected eventually. For now, the biggest problem, the biggest hit on China is the export, as China is still a big market for Chinese export. As we know, China has been actually diversifying its export, but the exports to the United States still took over 13% in the first quarter, close to 14%. And a lot of factories, say in the Pearl River Delta, where I'm in Guangzhou, Zhuhai, and these cities nearby, they export a lot to the USA. And there's been some research on such factories, and some factories depend on the United States for 70 to 80% of the export. So these factories will be affected most significantly. For now, the orders from the United States have been basically stopped, halted. The US buyers have said, let's stop it for the moment and wait and see how it goes on. Well, so the difficulty is that finding alternative markets for these factories.
And in that surge we saw of U.S. buyers getting a lot of stock in before the tariffs came into effect in April. So there was a surge of exports from China to America.
Yes.
And at the same token, there seemed to be a surge of oil imports into China. What was all the oil surge into China for? Was that for consumption or for storage?
Well, partly for storage, because the country's crude runs in March was not high. There was a lot of maintenance from late March and April, particularly April and May. So the run rate at refineries are not high at the moment. And in March, independent refiners boosted their purchase not in March, before March, in February, they boosted delivery for March because of concerns about tightening supply when the United States increased its sanctions on a lot of vessels, cargoes. So they actually purchased more than they consumed in March. And say in Shandong, for instance, yes, a lot of cargoes arrived in March.
The inevitable question is in the world today, I mean, there's a lot of questions that the oil markets would like an answer to, but I suppose the biggest question across all markets, and particularly energy, is China's position vis-a-vis the tariff war with the United States. China has so far taken a fairly stoic view. They haven't changed their posture. They haven't really engaged they've obviously retaliated, but they haven't, these claim by the Trump administration that they're talking to the Chinese saying, nobody's talking to us. We're not talking to anybody. What is the sense from the ground in China? Is China in, does this feel like this is a long journey, that this is something that's going to be with us through this whole year? What's your sense about China's posture and where and how long this is going to last?
Well, for average people, there's a strong feeling that the country has to do so because, well, there is no compromising because we know the United States better than to compromise. And the Chinese government has, well, said repeatedly is not engaging in any talks with the United States. And it's not going to do so unless the United States actually back down to the previous tariff and is requiring a level field for talks. But before that, we need the United States to do something for the negotiation to be possible. And for different people, it will be different. For factories, they are concerned about the alternative markets, but they also support the government's decision. So that's different. Some express their concerns about finding markets, and but most people would say, well, we just support the government's decision, and the government has made it clear that this is going to be a difficult war. Yeah, and so it's mobilizing the country, basically the country, to get ready for this one, to be prepared for difficulties over at least quite a long period of time. Yeah. And we do not expect any significant improvement over the short term. Yeah.
What about, Victor, the possibility of more stimulus, significant stimulus
Yeah.
into the Chinese economy? Something that we've kind of been expecting since COVID. It's sort of come in drips and drabs, but no real massive stimulus. What's the possibility that now that this is the reason they've been waiting for to actually unleash the full possibility of the Chinese government, the full capability of the Chinese
Yeah.
government to stimulate the economy?
Yes. Well, we are expecting more stimulus in the near term, and particularly more in the second quarter. And these measures include cutting interest rates, cutting the required reserve ratios for banks to increase liquidity and to encourage investment. And another aspect is the support to those factories that have been affected most significantly. I mean, those particularly rely on the United States very much. They support, the government needs to support the workers if they're laid off over the short term of time. And they need to give the factories time to make adjustments to find domestic markets or to find other overseas markets. So they would need more support to make such adjustment because they need time. Yes.
And Victor, similar thoughts about where, I mean, we talk about the supply side there with Jamie. On the demand side, at these sorts of prices, typically China loves to buy oil. I mean, $60 is a good deal for WTI and a
Yeah.
few bucks more for Brent. You'd be
Yeah.
putting it in your bathtub if you could, right?
Yeah. Yes, well, that's true. When the price is about $60 is good, a good level for China to increase its storage. And we expect some of the purchase will be for storage too this year. And unless, well, but crude oil not expected to go up much higher this year. I do not expect so. And so we expect the country to increase its storage in the coming months. Yeah.
What about the appetite to continue to import Iranian oil? The US government, the Trump administration, is becoming increasingly belligerent in its enforcement of their maximum pressure on Iran and sanctioning Chinese vessels and Chinese refiners. Is China likely to give up on Iran?
Well, independent refiners have been more cautious as the United States stepped up its sanctions. So, say for instance, in March, there were more cargoes arriving, But after that, they cut their purchase because of the concerns about new sanctions. And so compared with March, yes, the volumes had dropped. And we do not expect the volumes to rebound to the levels as high as we saw in March. But some independents will continue to take such cargoes unless so long as they think it's safe. Yes.